Hi there, welcome to Kneppyinvests. In this Appendix 4C June quarter video, I am going to be talking a relatively new company on the ASX, and that is AI Media. This company has seen the share price fall from when they IPO'd. However, in the past month or a bit, it does look like the share price is turning around and there is a bit of positive sentiment coming into this business. And I do think that is because of their June quarter results. It did look quite promising, in particular the cash flow into the business. So let's get into AI Media and we'll talk about some facts around this company, including what they do. AI Media was formed in 2003 by two gentlemen, and one of these guys was Alex Jones. And Alex Jones was born deaf, and he just wanted to improve the accessibility to information for people like himself. And that is exactly what AI Media does through live captioning, transcriptions, and translations. So if you're watching TV or live TV and you see some words coming on the bottom of the screen, that is the sort of thing that AI Media does. The ticker code for AI Media is AIM, naturally enough. Market cap $189 million, receipts $49.5 million, and they are operational cash flow negative for the financial year by $3.3 million. However, once we look at the June quarter results, we'll see that the company has become highly operational cash flow positive in that one quarter. That may be the reason why the market is getting a little bit excited about this company in the past month or so. The price to sales ratio not too high at 3.8. Now, this company hasn't been on the ASX for too long. They IPO'd in 2020 towards the end of that year. And we have actually seen the share price drift downwards from when they IPO'd. And then even though the share price has been drifting down, we are starting to see that share price breaking up. And we'll have a look at the chart later in this video. If you do want more information on this company, I highly recommend going to the website. If you can't do that, I don't know why you wouldn't be able to do that. Have a look at some of their presentations or go straight to their Appendix 4C that they released on the 27th of July. Since AI Media only listed on the ASX in late 2020, we only have 3 quarters of history for this company. And I ideally would prefer 2 years of history before I truly am able to judge the performance of a company. Now, with AI Media, I only have 3 quarters. So if I go back to the March quarter, this is only the second quarter they've reported. And receipts for customers for this quarter, 10.7 million. And they were operational cash flow negative by 1.6 million. More than likely, I would have seen these results and I would have noticed that receipts was above 10 million. And that would have been a bit of a tick in my book, but the fact that the company was operational cash flow negative by 1.6 million would have meant I saw these results and would have continued to move on to the next Appendix 4C, simply because this was only the second quarter they've released their results. I wanted a little bit more history. However, once we go to the June quarter results, you probably will be able to see why I'm paying a little bit more interest to this company. Another reason why I might have just passed on when I saw these results was they burned through $4.4 billion of cash during the quarter. Not only were they burning cash in operations, they also spent above $2 million in an acquisition. And by the end of the quarter, they had about $4.4 million of cash. And since they were burning through cash, I thought there was a possibility they were going to do a capital raising. And AI Media actually did do a capital raising. But before we get there, let's have a look at the performance. And things were or have progressed really well for AI Media through the June quarter. In fact, receipts grew from 10 million to 17.9 million. That's a significant increase in receipts in one quarter. And more importantly, the company was operational cash flow positive by over $5 million. And that's the whole reason I paid a little bit more attention to these results than the March results. And they finished the quarter with $17.8 million of cash simply because they did a $40 million capital raising. And one of the reasons they did that capital raising was because of an acquisition, a $28.7 million acquisition. So things are looking good for AI Media. And if they can continue this momentum going over the next few quarters, this could be a potential buy. It may even be a potential buy right now. I've already mentioned that AI Media only has 3 quarters of history, so it's a very small sample size, and I do like to see cash receipts growing through time. And we don't really know if receipts are growing through time. We only have 3 quarters here. In fact, receipts did go backwards from the December quarter 2020 to the March quarter, and then they've gone up $7 million in the most recent quarter. If they can continue that momentum going in the September quarter and the June quarter in this year, that would be a good sign. But we don't know if this was just a one-off or they can continue this momentum going. So that's the reason why I would be holding back and taking a position in AI Media. Just the lack of any real signs, absolute signs that this company is growing their cash receipts through time. Now, if you are more of a risk taker, now could be a time to take a position simply because what's happened in the past quarter. And definitely when you look at the chart, there is a sign the share price could be breaking out. So let's have a look at the chart now, and I'll show you why the share price might be breaking out. AI Media did IPO towards the end of 2020, and the share price was actually significantly higher than it was now. And we did see the share price take a massive tumble from when it IPO'd. In fact, the share price almost got to $1.50 on the first day of trading. And then it fell all the way to just above 70 cents in March of this year. So the share price actually fell by over 50% in about 6 months. But ever since that low of 70 cents in March, the share price has stabilized. In fact, we are seeing higher lows and higher highs, which is a sign that the share price is moving into an uptrend. And we have seen recently in the last few trading days, from when I'm doing this video on the 11th of August, the share price has just gone above the most recent high. So another higher high. So it does look like the share price is starting to move into an uptrend. And one of the reasons I do think the share price is moving into an uptrend is because of the June quarter results. So a positive financial results in one quarter. And if they can continue this momentum into the September quarter, we might see the share price at significantly higher prices than what we see now. So it's all about your risk profile. If you're willing to take that risk, or if you're willing to accept that the management can continue performing well, then potentially right now is a good time to take a position in AI Media. If you're more of a risk-averse investor and you want more proof that this company is growing and they can continue this momentum going over the next few quarters, you could just wait and see what happens with the share price and what happens in the next 2 quarters before you take a position. There are some investors that like 4 or 5 years of history before they even think of taking a position. I'm not like that. I'm willing to take a risk in a company. I'm not quite at that point with AI Media yet, but the chart does look quite enticing right now. As I continue on my journey to fulfill my mission, complete my mission on covering every single company that achieved an operational cash flow positive June quarter, look out for videos on these 4 companies over the next week from August the 11th. Arctis, Alcidion, Somnomed. I'm pretty sure I've done videos on all 3 of those companies in the past. And also a video on Raise. I'm not sure I've done a video on that company yet. I've had quite a few requests to do a video on Raise, so look out for that. I'm also going to be doing videos where I'm combining 4 companies in the one video. I've already released one of those videos, but a lot more videos to do going down that line where I combine a lot of companies into the one video, because a lot of companies were operational cash flow positive for the June quarter, but the way they became operational cash flow positive is a little bit suspect. For instance, many companies had very little cash receipts, but they received a fair bit of money through government grants and tax incentives, and that's the only way they were operational cash flow positive for the June quarter. So I'll try to combine most of those companies into the one video. That is all I have for this Appendix 4C June quarter video for AI Media. First time I've talked about this company, a recent IPO on the ASX, and I do wish them luck. Some of the things they're doing are helpful, particularly for the hearing impaired and deaf people. If you do have any questions about this company or any other company on the ASX, I'd love to hear your opinions and your thoughts. That's how we learn as investors. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.